All right, let's talk about something every crypto trader sees but maybe doesn't fully get: trading volume. This little number is the secret to figuring out if a price move is the real deal or just a bunch of noise.
You know that feeling, right? You're watching a chart and a coin just skyrockets. And you're sitting there wondering, is this for real? Should I jump in? Or is this a massive trap? Well, the answer, or at least a huge clue, is almost always hiding in plain sight, in the trading volume. So let's get right into it. What exactly is trading volume? The best way to think about it is like the market's pulse. It's the heartbeat, right? It tells you how much energy and actual activity is happening behind those price candles you're looking at. On the surface, it's super simple. It's just the total amount of a crypto that's been bought and sold over a specific period. But don't let that fool you. This number is everything. It's like a window into the market's soul. It tells you if people are genuinely excited and throwing money at something, or if they're just kind of watching.
Okay, so why should you care? Why does this one metric matter so much? Because volume is like the ultimate truth detector for the market. It's the thing that confirms whether a price trend is legit, whether it actually has the gas in the tank to keep going, or if it's running on fumes.
And hey, this isn't just my opinion. It's widely seen as one of the single most important indicators in all of crypto, period. It's what helps you tell the difference between a really strong, confident market move and, a weak and shaky one.
And the difference between high and low volume is, well, it's night and day. High volume means there's a ton of interest. The market is liquid, as they say. You can buy or sell a bunch without totally wrecking the price. Low volume, on the other hand, it's like trying to swim in a shallow puddle. Any little move, any single trade can create these massive waves, making it super risky and just tough to trade in.
So here's the key takeaway, the thing you absolutely have to remember. If you see a price going up, but the volume is flat or low, that is a huge red flag. It's screaming that the move probably doesn't have legs. But a price surge with a massive spike in volume, now that's what you want to see. That tells you there's real power, real conviction behind that move.
Okay, so how does this all work under the hood? Like, how does a bunch of people buying and selling actually make that price line go up or down? Let's get into the mechanics of it.
It's actually pretty straightforward. Every single trade adds to the total. So, someone sells 2 Bitcoin for 100 grand each, boom, that's $200,000 added to the total volume. Now try to imagine that happening thousands upon thousands of times every minute for a big coin like Bitcoin. The numbers get astronomical really fast.
It really just boils down to basic supply and demand. When you see a ton of buying volume, it means there are way more people trying to buy than there are coins available at that price. So what happens? The price has to go up to meet that demand.
And it works the exact same way on the flip side. When a wave of sellers hits the market, that high selling volume means there's a flood of supply. Way more coins for sale than people wanting to buy. So sellers have to lower their prices to find a buyer, and that pushes the price down.
All right, so looking at those simple volume bars at the bottom of a chart is a great start. But if you want to go to the next level, you need to know that serious traders use some more sophisticated tools to really dig into what the volume is telling them. Now, we're not going to do a deep dive and get all technical here, don't worry, but you should just know about a couple of them. There's something called on-balance volume, or OBV, which is great for seeing the overall buying versus selling pressure, and then there's VWAP, which kind of gives you the true average price based on where the most trading happened. They're just powerful ways to get an extra edge. Okay, let's make sure all of this sticks. We're going to do a little rapid fire round and answer some of the biggest questions people always ask about trading volume.
First question, is high volume good for crypto?
Oh yeah, generally it's a very good thing. You can think of it as a big thumbs up from the market. It means people are interested, it's easy to trade, and it's what makes a price trend feel, well, real. Okay, next up. You see the term 24-hour trading volume all over the place. What is that?
It's exactly what it sounds like. It's the total amount of a crypto that's been traded in the last 24 hours. It's just a really useful snapshot of how much action and interest there is right now.
All right, and for the million-dollar question, so what's a good trading volume? What's the magic number? Well, the tricky answer is, it totally depends. For the big dogs like Bitcoin and Ethereum, you're talking billions, even tens of billions every single day. That's normal. But for a tiny, newer project, good might just mean there's enough volume for you to actually buy and sell without single-handedly moving the price. It's all about context. So from now on, when you pull up a chart, don't just stare at the price line. Your eyes should immediately go down to the volume bars. They're telling a whole other story, a story about what the market really thinks. The question is, are you going to be listening to what it has to say,